I'm David Bank, and from Impact Alpha, this is an Agents of Impact podcast.
This massive build out in AI infrastructure is creating huge demand for clean energy technologies and materials in ways that we haven't seen before. So that's actually creating really strong market pull for many of the technologies we back.
That's Dawn Lippert of Elemental Impact, the nonprofit accelerator and investor, which for over 15 years has been identifying climate solutions grounded in community benefits. I spoke with Dawn about the gap in financing first-of-a-kind commercial projects, AI and energy infrastructure, and a new role for the environmental movement now that renewable energy is rolling out at scale. Dawn's team manages both a philanthropic fund and Earthshot Ventures, a venture fund that has backing from investors like John Doerr, Tom Steyer, and Emerson Collective. I think you'll enjoy our conversation. Dawn Lippert, welcome to the podcast.
Thanks so much for having me, David.
Dawn, you're the perfect person to kind of give us the lay of the land of clean tech, financing clean tech innovation, kind of where things are at in the present moment, as people say. There's so much, crosswinds and volatility, but you've got a kind of front row seat through, hundreds of ventures and across, states and countries. So, give us the high level view of, is this a good time or a bad time to be a clean tech investor?
It's decidedly both. I would say what's been interesting is that we're seeing companies and investors having a real struggle over the last year, as there has been, as you said, just a lot of volatility. And volatility isn't great for business. It's certainly not great for building companies and for entrepreneurs. And that's been really challenging in several of the sectors we work in. And then it's also been a great time to build in energy and things that are related to AI. The tools are better. The technology is faster than it ever has been before. And this massive build out in AI infrastructure is creating huge demand for clean energy technologies and materials in ways that we haven't seen before. So that's actually creating really strong market pull for many of the technologies we back.
And let's just dig in a little bit on that. Data centers, for example, are hugely controversial. There's even a bill, I think, by Bernie Sanders called the AI Data Center Moratorium Act. Are data centers necessarily bad?
Well, I think it's all a super local challenge, right? So it depends where data centers are, how they're going into communities, what that sort of looks like. And it's the same challenge we've had with energy infrastructure over the years, but it's just happening so fast and it's such a huge scale that I think it's really acute right now for data centers. But we also really need data centers to stay competitive as a country. So it's a puzzle we have to figure out. And I think for us at Elemental, we're builders. We're focused on working with entrepreneurs, on building companies that matter for the future. And we see data centers and AI as a way to pull through clean energy technology so much faster than we ever could with utilities. Before, when you're, geothermal or, green cement or low carbon copper or something like this, and you're selling to a utility, that could be a 5-10 year sales cycle and commercialization process. And now, because of the need for speed with data centers, we're just seeing different kinds of demand. Tech companies can come in with different structures and faster purchasing. And that can be a massive accelerant to innovation that we need across the economy.
So there is a huge demand, obviously, for energy, and I know, many of the tech companies had made a point to try to be as clean as possible. I think I've read recently there's a bit of backsliding, a lot more gas-fired plants powering these data centers. So I suppose the argument is, can we use data centers as kind of the anchor customer for huge clean energy infrastructure? Are you seeing that?
Yes, we're definitely seeing that. I mean, it's so interesting. Like when I started my career, when I was studying this stuff almost 20 years ago, I was taught in school that demand is always going to be flat and that the economy is always going to be growing, but we're getting more and more efficient. We're not going to really need to build new energy generation. It's really just about replacing dirtier with cleaner. And that was sort of the status quo. And that paradigm is completely gone in the last couple of years. And so I think we can think of this as a really exciting opportunity to commercialize the technologies that we know we need in the US and more broadly globally, and to have a very different kind of tailwind to do that. So yeah, we're seeing companies, Microsoft is a close partner of Elemental. We've worked a lot with Amazon in the past, with Google on sourcing interesting technologies. And we continue to see just a massive appetite for technologies that are cleaner, ideally cheaper, better, faster too.
I know that Elemental's always had a big focus on sort of community grounded solutions, community buy-in, community-driven solutions. And how does that play out, kind of in the same context? Is that helpful? There's always permitting issues and local opposition and different kinds of barriers that to building faster.
Yeah, it's a great point. So the Elemental model is that we've now, Elemental is a nonprofit investor. So we invest catalytic capital in companies that we think are needed. And we invest mostly in first of a kind projects and early projects where these huge capital gaps to getting projects built. And so it's like, what does it really take to build stuff? It takes capital, it takes expertise. So Elemental leans in not only with catalytic capital, a couple $1 million, funding a facility, funding a first of a kind project, but also with a lot of expertise to make those projects happen. One of the areas where we've developed expertise, really, again, for 16 years since we first started Elemental, and I started Elemental in Hawaii, where this is required to have the social license to build projects, is we help companies figure out how to partner with communities, how to ideally create invitation for them with communities. And so how that shows up is with every scope that we have with a company, we actually have a community engagement part of that scope. What does this look like? And for us, it's a question of how to build DNA into companies early so that they have the skill sets and the people and the knowledge to build community partnership. And that really de-risks their permitting processes, it de-risks their development over time, and it really changes their relationship with the community. We just collected some new data from our companies, and 98% of them said that the community relationships helped the project succeed. So this is not just about sort of like doing the right thing and it's feeling good about it. It's actually about creating business value and a long-term license to operate in communities.
And that sometimes, I mean, I know there's often, environmental opposition, even sometimes to green energy projects, which, at the sort of high level, obviously are applauded and approved, but sometimes at the ground level have impacts that people object to. And I know you've written recently, and it's kind of becoming a little bit of a trend, I think, that environmentalists have to kind of learn to build and not just fight. How was that received?
Well, it's very interesting. I think this is a real watershed moment in what does environmentalism look like right now? And it looks a lot less like fighting projects and a lot more like enabling good things to be built and working really closely with these key actors to shape how that happens. I mean, we just saw on new data that 47% of clean energy and data center projects were canceled last year. And this is twice as many that were canceled the year before. So we're just seeing the cancellations go way up. And the number one reason for opposition to clean energy projects is environmental concerns. So you really just realize that this paradigm can't last. Last year we actually did have record build out in the U.S. of clean energy, but it would have been almost twice as much if we had aligned earlier with community and made sure to allay those environmental concerns and had just sort of more alignment among our local groups, environmental groups, and our builders and developers. So this is, I think, really core to this question right now. And going forward, the numbers are continuing to look like they're ticking up. So this is a pretty existential question for both data centers and clean energy developers and people who need to build projects to reduce emissions.
I saw the statistics and I was surprised because I think I had thought, and maybe most folks would thought that projects had been canceled because of financing gaps or canceled government loan programs or that sort of thing, and that would have been the obstacle now given the sort of political environment. How have your companies sort of fared in the face of sort of pullback on clean energy priorities at the federal level?
Yeah, I mean, I think that is absolutely still an important ingredient for cancellations, and particularly for early stage companies. So what we've seen in the last year is that the capital gap, we did a survey last year, like about 50% of investors say that first of a kind projects are the hardest part to finance, and it's where companies are most likely to fail. But what's happened is over the last 10 years, we have invested a ton of venture capital and government grant money and all this other money in inventing technologies that make life much better, faster, cheaper, cleaner, all the things that we want to see across agriculture, across, interesting water technologies, new materials, new energy technologies, transportation access, all these different pieces. And now with the massive pullback in federal funding and the uncertainty in the investment market that's followed, we are at risk of losing many of those technologies that have been invented and having to sort of start again with momentum and teams and putting together companies to do that. So that's where at Elemental we're super concerned, and I think we've seen a lot of amazing momentum from our funders and partners to expand the Elemental capital and sort of the Elemental model as a nonprofit investor in the space that can afford to be sort of like consistent and clear and continue investing in this space even when there's disruptions. So, even for Elemental in the last few months, we've seen a doubling of demand for the kind of capital that Elemental provides. And I think this is really a reflection of where we're seeing capital pull back in the market. And I'll just give one example of a company, which is a company well, Nitricity. We first invested in them almost 4 years ago. It's a company that makes essentially low or zero carbon fertilizer using renewable energy instead of natural gas. Took many years of PhD work to make that science happen. It's working now. And the key barrier for them was getting the first of a kind project built in California's Central Valley. So Elemental came in as the nucleus of funding for that project and brought in, other funders and along the way to get the initial about $10 million plant built. And that project, as a first of a kind, could then unlock many, many more projects for Nitricity. It's a really interesting model where you have basically community-based, community-sized fertilizer facilities as opposed to having giant petrochemical plants that are built, creating fertilizer and then trucking it across the country. You now have locally created fertilizer, local jobs, much cleaner, and a much better product for folks.
And particularly timely given the blockages of, say, the Strait of Hormuz that have disrupted not only gas and oil but also fertilizer around the world. And so companies like Nitricity, local solutions, are going to be even more resilient and secure as the world even gets to be a more dangerous place.
Yeah, they absolutely will. And that's one of the things we're also seeing across the portfolio is the interest in these solutions that are local, where we control more of the supply chains, control more of the inputs. There's a really high demand for that right now. The other interesting part about the Nitricity one is it's an example, I think, in some ways of Elemental in action, because we not only invested in that plant and company, but we did it using something called the development safe. So one thing we realized, after many years in this space, is one of the biggest barriers for companies building first of a kind or early infrastructure projects is development capital. And so we created what we call a development safe with Wilson Sonsini. And it's a way that we can provide essentially a synthetic development loan. I mean, it's kind of crazy because if you're in real estate or if you're in some other sector, you can get development loans all day long to finance your projects. You can't do that in agriculture or in most things in climate. And so this was a real gap in the market. We created this sort of financial tool. It's very simple. The idea is to reduce transaction costs for folks that are building projects. And so not everything is a super complicated project finance negotiation for these relatively small projects. And it's like a safe. So again, low transaction costs, low friction.
And just so folks know, a safe is a kind of commonly used instrument now in venture generally to be able to sort of avoid, as you say, many of the complications of pricing around too early and kind of becomes kind of a convertible note. Is that right?
Exactly. Yeah. It's a simple agreement for future equity. So it's distinct from a convertible note in that it doesn't show up as debt. So that founders like that better, but it gives you the right to invest in the next round. So it's a really common way that companies are financed. So this is a development safe, which is a simple agreement for future equity, but it's also callable. So the company can return it back to the investor. And for us as a nonprofit investor, that just increases our ability to recycle capital faster, which is great for us. And for a company like Nitricity, once we did that first plant, then they raised an oversubscribed Series B and were able to give us the dollars back. So we were able to recycle our capital in 7 months and do the next first of a kind project. So that's the Elemental model. I mean, it's a super unusual model that we've spent a lot of time innovating on from a nonprofit perspective, which is that we take in grants, take in philanthropy and other kinds of grants, And then we invest in companies using a variety of financial products. And then we recycle any proceeds right back to the nonprofit and do it again. So it's like, in some ways, like an innovation forward green bank, or sort of like an evergreen fund on the nonprofit.
Let's just stick for a second on first of a kind, because that does, as you say, and the acronym is FOLK, as folks might know. That does seem to be the sticking point, in particularly now. A lot of companies were getting financing and loan guarantees through the Department of Energy's Loans Programs Office. I've noticed that it's now been renamed the Office of Energy Dominance Financing. It still exists in the Department of Energy. And one of the companies, Fervo, that you've invested in, which is a geothermal company, has kept its loan with the DOE. A number of others have been canceled, but Fervo is an example that geothermal actually seems to be in favor, even though solar and wind seem to be out of favor. I don't know really how you're going to have energy dominance in the 21st century without solar and wind. But there are still pockets where there's support, even at the federal level.
Yeah, there is still some support at the federal level. I think, we will continue moving with all of the resources that will come into these spaces. We need all of those resources. I think what's also been interesting is that this is a place where philanthropy has really decided to lean in, because there has been a pullback at the federal level. So there's still a lot of room to move on philanthropy. Saw some research that 90% of philanthropic leaders say that climate change will threaten the communities that they serve and their missions, but way less than 2% of global philanthropy goes to climate solutions. So there's a big delta there. And I think what's been interesting over the last year in particular is to see the philanthropies that are really leaning in to catalytic capital and working with markets. It's not something that philanthropy has traditionally really done, as you guys have written a lot about in Impact Alpha. But Elemental serves as intermediary for philanthropy to source really interesting companies. We look at more than 1,000 companies a year, to do the technical diligence on them, and then to support these sort of cost-effective, highly catalytic companies. So we have foundations like MacArthur Foundation, Rockefeller Foundation, Waverly Street Foundation have really leaned into how can philanthropy help shape and move markets at this time, which again is a bit of a unusual role for foundations in philanthropy, but it can be super high leverage, and especially in the energy and climate space where markets are so key to solving the problem. I think it's a really important thing for philanthropy to continue leaning into. And then one other thing that we just recently announced is a grant from the EQT Foundation, which is really interesting. It's more of a corporate philanthropy. EQT is one of the largest infrastructure investors in the world. They have over $270 billion in private capital and real assets. And they have a specific philanthropic program to support people who are working on this gap. So Elemental recently announced a grant with them. So we're really seeing like philanthropy come into this in a pretty exciting way. And I think it's just the beginning.
Well, that's an example. I mean, you need to have early stage support for anybody to ever get to later stages that the capital markets can start to deal with them. I saw a number, I think, in your on your website of something like 100 to 1 leverage, as you said, of capital that can be mobilized from philanthropic funding. That's, as you said, a pretty extraordinary return for anybody.
Yeah, I think that there's a lot of capital that needs specific kind of de-risking. And this is what Elemental's gotten really good at over time, is figuring out how to surgically use philanthropic capital to bring in and crowd in other investors and really sort of start that flywheel going. It's also, we use philanthropic capital also to do what you mentioned at the top, which is to really increase the community benefit. You mentioned Fervo, and they're one of my favorite examples. Last year, I went to visit the plant in southern Utah in Beaver County, Fervo's geothermal plant. And with Fervo, we funded part of their first of a kind plant before the plant in Utah. But then the next sort of way that we supported them was they said, we have these big issues. Usually companies that we work with have, a million different things they're working on, but typically two of the biggest issues they're solving are financing and workforce. And Fervo said, look, we're in a rural county in Utah. How are we going to get the right workforce aligned with the geothermal needs? And so we funded Fervo to create the first rural apprenticeship program for geothermal in the country. And we did it in partnership with Southern Utah University. And what was amazing when I went to Southern Utah University to talk to the folks running the program was they said, as a result of this sort of seed funding that Elemental had sort of started the ball rolling on, and then Fervo had really leaned into, geothermal had become one of the 3 priority areas for economic development for the whole university. So they were working on like animals and, taking care of animals and outdoor recreation because of all the national parks in Utah and geothermal. And so this is something I think where philanthropy can be super highly impactful, where you can start and seed a program and then you have tons of community enthusiasm for building that out and seeing what that could be. So it started with an apprenticeship program, but it's moved into micro credentialing for like community members around geothermal and this whole like lecture series and ways for like the tribes to be engaged and other kinds of like sort of professional development opportunities. And then there's a high school program that Fervo started running. So it's really sort of like snowballed because there's a ton of enthusiasm and because people actually do want to be part of the future economy that's coming. And we just have to provide much better avenues.
Absolutely, you need the talent as well as the money. And just on that, I know that we've been talking mostly about elemental impact on the nonprofit side, but there's also Earthshot Ventures as a sort of venture fund funding clean tech and climate solutions. So just as you think, you put on your 2 different hats. What are some of the distinctions or some of the things you think about on the Earthshot Venture side?
Yeah, I mean, we run a fund called Earthshot Ventures. It's a for-profit venture fund that we run as a sister to Elemental Impact, the nonprofit. And what happened is about 5 years ago, as we were, proving what was possible with catalytic capital and seeing these companies start to scale, we had a lot of market confidence and a lot of really interesting companies and entrepreneurs that we met through this process and said, we want to invest in these for returns, but we want to keep the nonprofit mission super pure and be able to invest in some of these companies and use the intel and networks and sort of differentiated approaches that we've learned over time to also invest. And so many of our partners came along with us. Some of the folks that are donors to Elemental came in to really lead on that fund. So we have some of our investors include folks like Emerson Collective and John Doerr and Builders Vision and MacArthur Foundation and many others and corporates and others. And the idea was to build a venture fund that is really returns focused, returns first, and can deliver the best returns in venture. And the companies also are delivering a positive climate impact and our experience investing across many cycles in energy and climate over the last 15 years can help us make some really good bets there. So I'm super excited about the companies we've invested in. Earthshot, we invested in 31 companies to date. And the real focus has been on where AI meets infrastructure and on critical minerals, because these are 2 of the huge markets that are really, I think, taking off and really well poised to deliver excellent venture returns. And we've seen that start to play out, which is super exciting.
And so, is there a fund 2 in the future?
Of course. I mean, we're entrepreneurs. We're always building, right? So, we've built these 2 to be a force multiplier together. So we share profit, we share like intel and pipeline and sometimes deals. And we're working on how to make the venture fund and the nonprofit together a force multiplier. But for us, this is really about being sort of positive sum to the ecosystem. Like, how can we together, prove that number one, climate is a great asset class to invest in for a venture investor. But on the nonprofit side, we are so focused on sort of convening, on building the field. We published everything we learned, case studies, we published the actual legal documents for our development safe so others can use them. We're very focused on how do we build this field because, private investment is taking off. It goes through ups and downs. We absolutely need it to scale energy, period. These are huge sums of money that are required. But the private markets alone are not yet set up to deliver all of the products and all of the technologies needed. And so that's where Elemental can come in catalytically. And there's so much interesting work to be done in the field there.
Well, you've hit 2 hot buttons there, obviously, Dawn: critical minerals and AI. So what are you seeing there?
So from an Earthshot perspective, we're looking at these as a couple of the really large markets. So I would say in critical minerals, we have several investments we're very excited about, one of which is Cobalt Metals. They're using AI to find the minerals that will drive the energy transition. So think copper, cobalt, nickel, et cetera. And it turns out that there's lots of those minerals available, and we need way more than are currently in the supply chain. And our sort of pipeline of discovery has really dried up. And AI can help find them really cost effectively. And so they found, one of the best new copper resources in the world, sort of proving out this thesis. It's called Mingomba in Zambia, and have dozens and dozens of other properties they're sort of working on across the world. So that's one that I'm really excited about. And partly because if you can use AI to find where minerals are, they're high grade, they're in less environmentally sensitive areas, you can be way smarter about where you're developing. And Mingomba is almost 10 times higher grade than most other sort of mines that are being discovered, which means way less waste and way less impact also. And then another company we're really excited about, right now we're seeing this whole host of companies that are building in this nexus of AI and the real world, AI and the physical world. And so it's AI applied to really important problems. And so one company we've invested in this space is a company called Unlimited Industries, which is applying AI to engineering, procurement, construction companies. And then we're also investing in much more efficient compute, because as we build out data centers, the more efficient we make compute, the less energy we have to build out. So on that front, we've invested in a company called Etched AI, which has a chip that's 85% more energy efficient than existing chips to run transformer models, which are the sort of the dominant AI model today. So that is something that is going to be really important for energy efficiency. And you can think of we think about energy efficiency of refrigerators and energy efficiency of appliances. Chips are the major driver and user of the new energy demand. So if we have much more efficient ones, we need much less energy.
Well, Dawn, just judging from your our conversation, I'd say you're much more excited than depressed about the current situation, and there's so many opportunities that you're seeing. You've assembled a tremendous network across the different sectors and across geographies, and we're going to be counting on you to keep us in the loop and keep us informed about what's going on. So thank you so much for joining us.
Oh, I really appreciate that, David. I think as important as anything, we've assembled an amazing team, because it's really people that sort of make this happen. So I am definitely optimistic about our ability to solve these challenges, and I get to work with entrepreneurs every day, so it's pretty hard not to be.
Awesome. Thank you so much, Dawn.
Thanks, David. Appreciate it.
That's going to do it for this Agents of Impact podcast. Big thanks to Dawn Lippert, to Elemental Impact, to our producer Isaac Silk, to the whole team at Impact Alpha, and to all of you, Agents of Impact, with deep gratitude for all that you do.